Mike, are we recording?
Yeah, we are recording.
Okay, great. All right, well, we'll go ahead and formally get started. I want to welcome both of you, Fred, Lindsay, to a meeting of the DC Tax Revision Commission. As I mentioned a moment ago, this is the middle of budget season here in DC, so I know folks will be trickling on gradually, but this meeting is a public meeting, so we are recording it. We'll be posting the recording and minutes on our website. My name is Nick Johnson. I'm the executive director of the commission. Yeshun Sayin, who's a member of the commission and executive director of the DC Policy Center, will be our moderator today. So without further ado, I'm going to turn it over to you, Yeshun.
Thank you so much, Nick, and hello, everyone. Thank you for joining us on a Friday afternoon. It's both cold and warm here in DC. I hope you're having a better experience than we do. And thank you, Commissioner Sepp and Director Kulbroth. Thank you for joining us on a Friday afternoon. Our goal this afternoon is to gain insights into the administration of New Hampshire's business enterprise tax and understand better the details on how various taxpayers are affected. And joining us today is Lindsay Stepp. She's the Commissioner of the New Hampshire Department of Revenue Administration. She's also a member of the Board of Directors for the Federation of Tax Administration. Thank you, Lindsay. And Frederick Kulbroth is the Director of the Audit Division at the New Hampshire Department of Revenue Administration. Thank you so much, Fred, for joining us. We have some members of the Tax Revision Commission here. So please, I'll start with Gregory. Please introduce yourselves.
Hi, I'm Gregory McCarthy, a member of the commission. Thank you for being with us.
Erica?
Hi there, I'm Erica Williams, Executive Director of the DC Fiscal Policy Institute. I'm under the weather, so I'm staying off camera, but thanks for being here.
I'm so sorry to hear it. Glenn?
Hi, I'm Glenn Lee, Chief Financial Officer for the District of Columbia.
Again, thank you so much. I'm just going to frame the discussion a little bit. The District of Columbia is now considering a broad-based low-rate tax on business activity, which is very similar to the business enterprise tax you have had in place since early 1990s. So your tax regime has come to our attention as a possible model. Just to set the stage, this is our second meeting in a series of meetings from folks from New Hampshire. In our first meeting, we heard an overview of the tax and some details about its impact on revenues, on individual taxpayers. In this meeting, what we're really looking to learn about is how the tax is implemented and how it is administered. So I will start with my first question, and please, everybody interrupt and ask if I'm not doing a good job. But maybe I'll start with you, Lindsay. Can you remind us of the basics of the business enterprise tax in New Hampshire? Who pays the tax? How is it calculated? And how often do taxpayers have to pay?
Sure, happy to, and happy to be here. We are sitting with about 12 inches of snow at the moment, so it's not any better here in terms of weather. So business enterprise tax was enacted in 1993. As you mentioned, the tax is paid by business enterprises, and that is defined as any profit or nonprofit enterprise or organization. That can be a corporation, a partnership, an LLC, a proprietorship, an association, trust, foundation, etc. The only exception are enterprises that are exempt from tax under the Internal Revenue Code under Section 501c3. So it's only 501c3s that are exempt from the tax. The tax itself is assessed on what we call the enterprise value tax base. And so that's the sum of all compensation paid or accrued, interest paid or accrued, and dividends paid by the enterprise. The current tax rate is 0.55%, and that is effective for taxable periods ending on or after December 31st of 2022. The tax rate has been going down in recent years, but 0.55% is the current tax rate. There's a threshold so once businesses reach that certain threshold, the tax becomes effective for them. And so our current thresholds, which are for taxable periods beginning on or after January 1st of 2023, those thresholds are 281,000 of gross receipts from all activities, or 281,000 of that enterprise value tax base. So the compensation, interest, and dividends. Those folks must file a return, and that threshold, we recently received legislation, so we're going to adjust that threshold biannually. So every other year, it'll be adjusted for CPI. In terms of who pays or files and when, there is a requirement to make estimated payments, and you'll make estimated payments if your tax liability exceeds $260. And those are 4 payments paid at 25% each, and that's on the 15th day of the 4th, 6th, 9th, and 12th month of the taxable period. And then for returns or extensions, those are due on the 15th day of the 3rd month for partnerships. So that would be March 15th for calendar year filers. And then the 15th day of the 4th month for corporations, proprietorships, fiduciaries, and combined returns. So again, for calendar year filers, that will be April 15th. And those deadlines are consistent with our business profits tax. So same filing deadlines and estimate deadlines as the BPT. So that's kind of a general overview or reminder of how the BET is generally structured.
That's great. I have a million questions for Fred, but before I turn to him, it was really interesting to me to hear that the rate is going down. Is it because it's a calculated rate?
So the rate's been going down just based on the desire of the legislature over the past few years. Both the business profits tax and the business enterprise tax rate has been decreasing. And that's just the desire of the legislature at this point.
And then you mentioned $281,000, which is a very peculiar number.
Yeah.
Where does that come from?
So that comes from, so the 2 thresholds, the gross receipts and their enterprise value tax base threshold used to be different amounts. And at some point, I think with good intention and hopefully good results, it was just too confusing for taxpayers to have 2 different thresholds. So the amounts were set to be equal to one another, and then the 281 is just a derivation of our adjustment to CPI. So we start to get somewhat weird numbers, or what look like maybe weird numbers, strictly due to CPI adjustment.
Okay, thank you, Lindsay. Fred, I will turn to you next. You are the tax administrator, so I'm going to ask you this question.
Director.
Um,
Director of audit.
yeah, or audit, yeah, same. In some ways, you're like responsible for administering and implementing the tax. What do you like and what do you dislike about the business enterprise tax? Are there any particular challenges or costs to sort of administering or even auditing it? Do businesses generally do a good job or somewhat good job complying with it, or is this a problem for you guys?
Sure. And just to start the conversation, we generally don't take a position on whether a tax is good tax policy or good legislative policy. We just administer whatever the legislature enacts. The folks who adopted the business enterprise tax and the basis that, or the justification for it, as testified during the hearings when the tax was adopted, pointed to that it has a very, very broad base and a narrow rate, making it less painful than other income-based taxes. New Hampshire has a a business profits tax, which is more like a traditional corporate income tax, although it's paid by all businesses. The selling point for the business enterprise tax is that, as Lindsay pointed out, the rate is very low and the base is very, very broad. That makes it less of an audit challenge than our business profits tax. We have many more audit issues, both in terms of number of issues and in terms of scale, the size of the adjustments that result from the audits of the business profits tax, our corporate income tax, are much larger than the business enterprise tax. So to answer your question, we have fewer audit issues with the business enterprise tax just because it is a simpler tax. And frankly, the incentive, because of how it's structured, there's not a lot of incentive to play games with it. Usually the issues that we have stem from honest, good faith ignorance of the tax because it is so different compared to what folks are used to. They're also not used to having to potentially pay two different business taxes. And I think, as Lindsay mentioned, you take a credit of one against the other. So as a practical matter, you only pay the larger of the two as a practical matter or as a mathematical issue. But folks aren't used to that. And so usually the audit issues stem from just honest ignorance stemming from the unique nature of the business enterprise tax.
And how much do you rely on the federal corporate income tax returns or other types of federal tax compliance stuff to administer this?
So when taxpayers file, they generally will file both returns for both taxes, both the business enterprise tax and the business profits tax. So they're actually filing them, assuming they cross the thresholds for both taxes. They file them together with sort of a cover sheet, is one way to think of it. We call it our business tax summary, and that really rolls everything up to one form or one schedule, however you want to think about it, that is filed on top. And part of that global package of tax filings is their federal return. And so when we look at the business enterprise tax, we can look at the amounts they've reported on their federal return. And a lot of the components that feed into the business enterprise tax come from federal attributes. And so, and our rules will point to that. And so practitioners and tax preparers can look to the federal amounts, and we can as well to help audit those numbers. So it's pretty simple in terms of tax prep once folks get the hang of it and they understand the logic of it.
That's really helpful. Fred or Lindsay, either one of you, we're kind of curious about the apportionment rules. How would you say, like a big law firm that has operations in multiple states, calculate the business enterprise tax? Or, you know, the example I have in my mind is, let's say Donald Trump hires a lawyer in New York to argue a case on 6th Circuit courts in DC. You know, we're not able to tax that right now. If you were to think about, I don't know, I can't really think of a controversial figure in the New Hampshire. Let's say Richard Russo writes a really bad novel and he gets sued. How would you tax that?
Sure. That's a great question. And the apportionment for the business enterprise tax and the sourcing of the factors is definitely different than traditional corporate income tax sourcing. So you want to sort of think about it differently. In New Hampshire, we are on single sales factor for our corporate income tax, what we call our business profits tax, but we still have 3-factor apportionment for the business enterprise tax because the factors are different. The base is different. The factors actually the apportionment factors mirror the base. So it's the compensation, the dividends paid, and the interest paid from the base. Those are our apportionment factors. And then to your example about what do you, how would you source the wages or the compensation paid to that lawyer, for example, who's doing high profile legal work for someone out of state? We have a very particular rule for sourcing of compensation, and you walk through the logic of the rule and work through the facts that, for example, would apply to that lawyer and her law firm to figure out where that compensation gets sourced to. And I'll walk through it as real quickly as a high level matter, or in a more granular matter. But just as a high level matter, real quick, the rule is looking at where does she work out of, where is her employer, and where is she doing the work? And then you sort of have to go through very, very specific rules there. So just to answer your example real quickly. So first you would look to see if the services are performed entirely within New Hampshire. So if she's, let's say, performing all of that work, from remotely from her home in New Hampshire, that compensation is going to be sourced to New Hampshire for business enterprise tax purposes. Now, let's say she has to fly to New York and argue before the New York Supreme Court or engage in mediation or depositions there. So now she's performing services both in New Hampshire, but also outside New Hampshire. So first you have to see, are those services outside of New Hampshire really just incidental to her work here? If she's doing most of it here, it would still nonetheless be sourced to New Hampshire. And then if it's the case where she's performing a lot of work outside of New Hampshire, so it's no longer incidental, then you have to look for what the term of art in the business enterprise tax is base of operations. You have to look to see where her base of operations is, and there's a definition for that. I don't want to get super granular, but it's generally where she's working from. So if the base of operations is here, then it gets sourced here. If there is no base of operations, then it's where the direction or control is being exercised over her services. And then if there is no base of operations in a state where services are being provided, then it's where she resides. So if she resides here in New Hampshire, it would be here. Very simplified explanation of the rule, but for the most part, when you work through the facts of someone's situation, you can work through the logic of the rule and figure out where you would source it.
That's really helpful. Lindsay, let me turn to you. You are one of the board of directors for the Federation of Tax Administration. This conversation about a business activity tax somewhat reminds me of like the combined reporting rules a few years ago, where everyone discussed like how do we rethink about reporting of income. This in some ways is about reporting of income. Do you hear in your meetings with the other board members at the Federation for Tax Administration an increased interest, or if at all, any interest in a business activity tax?
I would say not regularly. I did hear through the grapevine that DC might be interested in something similar to our business enterprise tax, but for the most part, I think we're a little bit considered out of the norm in that way. But something to know about New Hampshire is our tax profile looks a lot different than many states.
Right.
We don't have a broad-based sales tax, and we don't have a broad-based income tax. So our business taxes make up a more significant portion, I think, of our revenue pie than other states, where there is.
What is your biggest source of What's your biggest source of revenue? I see you have retail about 14%. That's greater than the US average. What is it that's like really feeds into your tax base
In terms of an industry or?
or tax class?
So our business taxes are our largest
Oh, okay.
source of revenue. The business enterprise tax combined with the business profits
Okay.
tax. And so again, different than other states. And so it makes our concerns about changes in the economy or impacts of, say, something like COVID, we're impacted a little bit differently than other states just because of the profile of taxes that we have.
Well, thank you. What Nick neglected to tell you is I'm generally put in this position to like reduce the average intelligence in the room. So I'm going to turn to the other members of the Tax Revision Commission to like lift up the intelligence. So Tony, Glenn, Erica, Gregory, Nick, please, if you, and Mike, if you have any questions, please come on board.
I would just thank you for your time. I really appreciate it, but I don't have any questions myself.
Gregory? Glenn?
Do you folks know how different your definitions of gross receipts or compensation are from what the 2 or 3 gross receipt states in the country?
I don't know off the top of my head. Fred, do you have any thoughts on that?
No, I don't know what definitions they're using, but I can talk about what we do. So ours are, as I mentioned before, pretty closely tied to federal concepts. What we have to do is, and like Lindsay was saying before, we have a unique structure in New Hampshire. Our Constitution makes us tax all entities the same way. So what we have to do is sort of turn some traditionally federal concepts and sort of turn them into the parlance of corporations. So in New Hampshire, you'll often hear us talk about, you know, what are really distributions federally, but we'll talk about them as dividends. So what we have to do, and what most of our statutes do, is start with federal jargon or federal terms of art, and very clearly define them that way in our statutes, but then sort of turn them into New Hampshire specific terminology. So if when you go through the business enterprise tax, a lot of the terms of art do specifically reference very, very specifically federal concepts and then turn them into New Hampshire concepts. But I don't know how that matches up to the other states, as you mentioned.
Thank you, Fred. Erica?
Yeah, thank you. This is really helpful, and actually you all answered a lot of questions I had just through your back and forth with Yeshem. I am curious, well, a couple questions. One is, you know, we are pretty unique as a taxing jurisdiction as well. And while we do have income and sales taxes, obviously we have limitations on our ability to tax income in particular earned within our borders. And so we're looking for ways to broaden our base, our tax base. But I'm also just curious, you know, in thinking about like a post-COVID economy and tax system that can be resilient, I'd be interested in hearing like about fluctuations in sort of your collections through the BE, your business enterprise tax, and whether that's been steady. I'm also, let's see, I have another question here. Oh, I'm also just curious. I know that it's a long-standing tax in New Hampshire, but if you have any insights on sort of implementation and how easy or difficult that was, whether it was a transition from a different form of taxing businesses, and just any details around that. Thank you.
Sure. So I'm going to have Fred answer the second question first in terms of how the bet came to be. And then I'm probably going to have a very long-winded answer to your first question about kind of the revenues around the business enterprise tax. And I'll kind of hit on a few different things in that conversation that I think might be helpful or interesting or useful. So Fred, why don't you start with how the bet came to be?
Yeah, and as Lindsay knows, I could talk for way too long about this stuff because I love the history and sort of the behind the scenes stuff with the taxes. So I'll behave myself and be quick here, but if folks have follow up, you could probably get me to indulge in that. So it's in terms of history and how easy it was to administer. So the trickiest thing is probably to make something like this happen politically, especially in a state like New Hampshire where we, are sort of famously anti-tax. Like, Lindsay was saying, we don't have broad-based sales or individual income taxes, and there, politically, there amongst both parties, there's sort of the skepticism of adopting new taxes. It makes you wonder how they got it done. It was a Republican governor who adopted it, and he put together a small team of folks that were in government and in the private sector. There were folks in our department, New Hampshire DRA, that were part of that effort. Obviously, there were tax lawyers and CPAs in private practice and public accounting that participated in that. And the business community, believe it or not, was actually really behind it because, and I won't name any names, although it's out in the public sector. I don't think I'm really violating any confidences, but without saying any names, there were at least one very prominent business and individual, and really others behind the scenes that were upset with the current state of taxation, because under our corporate income tax, and I don't know exactly, I've seen different numbers, but the number offered by the department at the time was that at the time, only 1 out of 5 businesses in New Hampshire was paying our corporate income tax. And of that 1 out of 5, it was an even smaller portion that were paying most of the tax. And so there were very prominent businesses who said, this is not equitable. Like Lindsay was saying before, the state leans very heavily on the business tax to pay or to support the general fund, to fund the general fund. And it was viewed as inequitable by the business community. And so you had this unique situation where folks on both sides of the aisle, inside government, in the private sector, all were supportive of finding a solution that would be equitable. And this is the business enterprise tax is what they developed. And like Lindsay said, it has a very, very broad base. Basically, every business pays it, but they pay a small amount. And so there were folks who were upset when it was adopted because they 4 out of 5 businesses weren't paying anything. And, the day after the tax went into effect, they, now they're going to be paying, those 4 out of 5 are now going to have a liability. So, it wasn't necessarily popular with everybody, but there was a fiscal need at the time. There was a $40 million budget deficit, which at the time was a lot. It seems like nothing now, but at the time was significant. And there was a real economic need for it because the business community, or at least the tax-paying business community, was upset and looking for a solution. So that's the history behind it. In terms of, to answer your question about challenges to administer it, that's what it is. It's so broad-based that you're going to have folks who don't know what it is, haven't previously paid tax, and have to be sold on it. If done like the bet, it's not a lot of money and it's easy to file. It's a very, very simple return compared to a corporate income tax return. So it's not difficult to prepare. It's not difficult to file. For a small business, it's very straightforward. And it's, not a lot of money if assuming the rate is commensurate with the business enterprise tax rate. So
Okay.
I've said enough. I could go on and on and on.
Thank
but
you. No, that's really helpful. I'll turn to Nick next. He's the executive director of the Tax Revision Commission. So, sorry, Nick, what's our thing? Oh, am I?
Lindsay was going to answer the first part of Erica's question.
Oh, yeah.
About revenue trends.
Yeah, please.
Sure. Okay. Yeah. Let's talk a little bit about revenue trends because I at least think it's interesting. So the first thing to know with respect to revenues is the business enterprise tax is a dollar for dollar credit against the business profits tax. So Fred and I have kind of talked about this a little bit in our comments, but basically every dollar that that a business would pay in business enterprise tax is a credit against their business profits tax. And if there's unused bet, then you can, so if you had $100 that you paid in bet, but your BPT liability for that year is only 50, so you have an extra $50 in bet credit available, that can now be carried forward for 10 years. So that's how you kind of get into this place where Fred mentioned you kind of have these bet only taxpayers, especially we will see that in service companies like law firms and accounting firms with high payroll, and they will essentially be a bet only taxpayer. The thing to know when you're thinking about the credit of the business enterprise tax against the business profits tax is one of the things you have to decide is if you have a credit against the business enterprise tax, how does that essentially waterfall or cascade to the business profits tax? So I'll give you an example. We have a community development finance authority investment tax credit. So if a business invests in the community development finance authority, they get 75% of their contribution is available to them as a credit against bet. So that essentially lowers their bet liability. But the statute allows that lowering of the bet liability to essentially be counted as taxes paid. So if that bet credit reduced a company's bet liability from $100 down to $25, the company still gets the credit for the full $100 against the BPT. We have other credits where it is not a cascading credit. So if you, for instance, our research and development tax credit, that research and development tax credit can be taken against the bet or the BPT. So if you reduce your bet liability with a research and development tax credit, that does not count as taxes paid. So if you went from $100 in bet liability down to $25 because you had $75 of an R&D tax credit, the amount of bet that's available to be used against BPT is only that $25. So it's a little bit complicated, but it's kind of something to consider, and it's important to consider if you have multiple credits and how you may want to promote a credit, or the legislature may want to promote one credit over another. If you allow it to be counted as taxes paid, you kind of get double your money. The other thing that I think is important to know, and Fred did mention this, while the bet and BPT are separate taxes and they're reported on separate forms, they do roll up into one form, what we call our BT summary. So as Fred mentioned, if you have a taxpayer that knows about the business profits tax, they're going to know about the business enterprise tax because they have to file a form that highlights the business enterprise tax for them. The hardest thing for us is folks that do not have a business profits tax liability and only have a business enterprise tax liability. Those are the folks that can be kind of hard to find or hard to get onto the tax rolls. When we look at the revenue relative to the two taxes, it can be a little bit difficult. So when a business files an estimate or an extension, we do ask for them to say what portion of the estimate is for the business enterprise tax and what portion of the estimate is for the business profits tax, and that's the same on the extension form. However, we don't penalize them if that split between the two taxes is wrong. So there's no underpayment penalty relative to whether you got your split between bet and BPT correct. So what basically happens is for revenue that's received through estimates and revenue that's received through extension payments, it's really hard to know what the ultimate split for that revenue is going to be until that final return is filed. So we make some educated guesses. We look at the history of how, if it's a taxpayer that's been on the tax rolls for a while, we will look at what their historic split between the two taxes has been, and we'll divide the revenue appropriately. For a new taxpayer, we just kind of look to the general split of all taxpayers, what the split is between BET and BPT, and we'll apply the money. So really, you don't know the true split, say, for a tax year between BET and BPT until the returns are filed, which can be on extension. So they can be, close to a year after the tax period has closed. And so that split between BET and BPT can be a bit challenging for us in terms of wanting to draw conclusions between what proportion of our revenue is BET versus BPT in kind of a real-time scenario. You can't really do that as easily because of how they're accredited against each other and then reported ultimately on a rolled up form. But in terms of recent observations, relative to the BET and BPT, so looking historically back to, say, 2015, 2016 timeframe, business profits tax was about 50% of the total business tax revenue, with the business enterprise tax being about 40%. So 60-40 in the 15-16 timeframe. We then moved, looking at 2020, 2021, that became 70% business profits tax, 30% business enterprise tax. And then looking even into 2022, we've gone to almost 75% business profits tax and 25% business enterprise tax. So, and that, theoretically makes sense, right? We've seen an increase in these post-COVID years in, corporate profits, and that's very much reflected in what we're seeing. And the corporate profit growth is even kind of overshadowing what we know to be very low employment and record wages, and compensation being a main component of the base for the business enterprise tax. The corporate profit growth is just more than what we've even seen in terms of compensation growth. In terms of overall, what do the combined taxes kind of look like or do for our revenue pie here in New Hampshire? Since the inception of the BET, so since the time that we've had both the BET and the business profits tax as a whole, business taxes as a whole have only declined year over year 5 times. And of those 5 times, only twice has that year over year decline been more than 10%. And that occurred from fiscal year 2008 to 2009, so the recession in the 08-09 timeframe. And then we saw a greater than 10% reduction in business taxes as a whole from 2019 to 2020 with COVID. So the two taxes, kind of as Fred mentioned, the broadening of the base kind of allows our business taxes as a whole, I think, to be a little bit more resilient than if we were strictly looking at business profits tax or corporate income tax. The last thing I'll say relative to the BET and revenues, and this is for tax year 2021, so it's a little bit outdated, but it's the most recent data I have readily available. Looking at our total population of business enterprise tax filers, 47% filed a zero return. Now, this is before we increased the thresholds. So we were getting a lot of zero returns. And now with increased thresholds, we should just not be getting those returns at all. But we had 20 taxpayers that paid us more than $1 million in BET, and that represented 15% of our BET revenue overall. So even though it does broaden the base, you tend to have a lot of, at least in our experience, we have a lot of taxpayers that pay very little, and that the majority of the revenue, even, let's see, almost 40% of the revenue is coming from less than 0.5% of the taxpayers.
Thank you, Lindsay.
So that's a long-winded explanation of business
That's
enterprise
really
tax
helpful.
revenues.
I'm gonna turn to Nick. Next, Nick is the executive director of the Tax Evasion Commission, and he has thought deeply about this far more than we have done. So, Nick, do you have any questions? You're on mute. Somebody has to do it.
Yeah, that was me. Thank you guys again so much. These super detailed answers are extremely helpful. Back on the apportionment question, Fred, can you just say a little more about the extent to which those rules are set in statute versus the extent to which you guys have sort of pieced them together via regulation or by rulings, and then can you also talk a little bit more about the implementation process? If you know, it sounds like you know a fair bit about the history of it. Just curious, was there, and one of our participants in the chat, or TC's former chief economist, is asking, was there any kind of phase-in period in which taxpayers were invited to share information? And generally, any sort of reflections of the arc of those first few years, what that looked like. So two separate questions, one about apportionment and one just a little more flavor about the implementation process.
Yep. For apportionment, a lot of that is set forth in our rules. For example, that whole explanation I gave a little earlier about the sourcing methodology and how you would source for example, compensation paid to an employee or a member or partner here in New Hampshire. All of those rules that I cited are from our rules, are from the regulations that were promulgated by the department. Some of those concepts do come from the statute, but a lot of the concepts come from the statute, but they're built on in the rules. So we definitely lean heavily on the regulations to put some meat on the bones of what's in the statute. It's not a lot coming from case law or other sources outside of statutes or regulations, but the legislature did give the department quite a bit of rulemaking authority to flesh that out. As I talked about, there was a lot of interplay between the department, the private sector, and the legislature when the tax was developed. So a lot of the concepts did make their way into the statute itself. And I can get more granular if that's helpful. As far as the implementation, and I apologize, I saw the chat comment kind of bubble up, but I'm rusty at using WebEx and I can't bring up chat again. But I saw the question come up about some kind of transition period. I think the question in there was, could folks essentially file pro forma returns for a couple of years before having to pay or something like that? So there was a transition mechanism in the statute at the time. Oh, thank you, Lindsay. And of course, Lindsay rescued me. Yeah. So, thank you, Lindsay. There was a transition mechanism at the time. It was not some kind of, phased implementation where folks got used to it before they actually had to pay, because the state did need the money. And like I said, there were some pretty grumpy and influential companies who wanted other folks paying money into the general fund immediately. So a phased payment wasn't going to work, I don't think, politically or practically for the legislature or the business community at the time. But folks were very sensitive to the fact that the business enterprise tax, it's not an income tax, and the tax is structured to be indifferent to whether a company is operating from a loss position or not. And that was something people were sensitive about. Not only do they have to learn how to file and pay this tax, but they're going to be paying even if they're potentially in a loss position, was the conversation at the time. So The two separate concerns there were sort of addressed with two different mechanisms. First, people learning how to pay the tax. Like Lindsay was saying a moment ago, it's the forms are all, and historically, even though the forms have changed quite a bit over the years, and we've created different forms for a while now. We've had what Lindsay described as our business tax summary. Right from the get-go, even though the forms have changed over time, the taxes have always been issued on forms that either reference one another or include aspects of the other. So even if you're a relatively, even if you're not a sophisticated tax preparer, you're a small business and you're trying to do this on your own without an accountant, which is not necessarily advisable, you'd have no choice but to bump over the business enterprise tax forms. So that education kind of happened organically because as an administrative matter, the forms just went out together and folks just learned about it that way. And then the way the legislature and the other stakeholders dealt with the problem of phasing in and having people learn how to pay was there was this unique credit that no longer exists, and this all predates me, so I've never seen what it looks like in practice. But they had a transition credit that only existed for the first 3 years of the tax, and was gone afterward. And so I've never seen what this looks like. But it was a credit that essentially started with your federal NOL calculation. Again, this is assuming someone was in a loss position and had been in a loss position for X number of years. It allowed them to use their NOL, or really a portion, a formula, allow them to use a portion of their NOL as a credit for 3 years against their business enterprise tax. So it lowered their NOL, or a fraction of their NOL lowered their business enterprise tax for 3 years. And that's how it sort of dulled the pain of transitioning to this new, previously untested tax. So that's how they dealt with transition issues, administratively in the forms, and then allowing this unique credit that has long since disappeared.
Thank you. This is really helpful. I'll ask one last question. I know we have 8 minutes left on a Friday afternoon. I know we have many more things to do. But on balance, do you think that the business enterprise tax is a positive or a negative for New Hampshire?
I'll just say, Fred mentioned earlier, we try not to take positions necessarily, but I do think that the tax achieved its goal. And, if there was maybe one thing that I would change about it, it might be the name. I'm not sure that the name is terribly indicative. I mean, maybe to us tax people it is, but maybe something more like a business activity tax, or when various which I think is maybe what you guys are considering using, when various tax publications or policy publications look at tax types, it's often viewed as kind of an alternative minimum tax, and that is, I think, easier for people to understand. So just strictly from a compliance point of view, it would have maybe been my preference that it was called something different, that it was a little more obvious that businesses needed to pay it. Fred, I don't know if you have anything else.
No, I would echo that. They were making it all up as they went along, and maybe hindsight, the marketing could have been better.
Yeah, thank you. This is really helpful. I will tell you, like, my worst nightmare is that the world comes to an end and the only thing that's left behind is IRS publications on like how to bill taxes. So I'm glad that I'm first, thank you so much, Lindsay and Fred. We really appreciate your time. It's a Friday afternoon. Rest of the tax revision commission members and Nick, thank you so much. Also tolerating with me, as you know. Friday afternoon yeshim is not an easy thing. Nick, do you want to close us?
No, just my thanks as well on behalf of all of us. This has been extremely helpful, and I hope you all won't mind if we occasionally pick your brains if we were to go forward in any way. I'm sure there are lots of questions among us, and as well as others here in DC. And I will just note for everybody's benefit that this is, as Yesha mentioned at the top, the second of our third conversation. Our third conversation is a week from Monday. We'll be talking to some of your legislators from your tax committees who interact with this as well as constituents. So that should be an interesting conversation. But again, thank you. Thanks to everybody for showing up on a Friday afternoon.
Sure, and please,
Super
please,
helpful.
please reach out if there's anything that you need or if you want data or anything that we referenced today. We're happy to send that along. So
Fantastic.
Thank you very
Lisa,
much.
Fred. Thank you, everyone else. Bye.